Congratulations, Paul. Best Australian share fund, not just for this year, but for the past 3 years now. How is Fidelity doing it?
Well, first of all, thank you very much. Definitely appreciate it. I guess we feel really comfortable in our process and our approach. We've got a really strong local team, but we have a huge global team of analysts as well. And when we're a bottom-up fundamental investor, and we're looking at a company, we're talking not only the company, but their competitors, suppliers, distributors, customers. And a lot of the time, they're not necessarily other Australian companies. They could be right around the world. Just look at Woolworths and Coles now. Their competitors are really Aldi, German, Costco, American. Rio Tinto's major customers are Baosteel, Nippon Steel, POSCO. So it's about the process, it's about the discipline, but it's having a really strong Aussie team, but actually having access to global companies as well has made a big difference.
And it's shown in your performance. I mean, since inception, the fund, I think, has gone 12.68%. But it has been a tough last year. You've got positive figures, but it hasn't been the case with all Aussie share funds. It's been a tough year. What's happened, and what would you advise investors for next year?
It has been a tough year. As you said, we've been positive, but hasn't been huge positive. And the Australian economy is really going through a bit of a transition. We've been going through this mining boom. That's definitely slowing right down. The Reserve Bank's lowered the interest rates, trying to stimulate the rest of the economy. Now, I think that transition is working, but it is still lower growth. So we're still, while trend growth might be 3-4%, we're probably mid-2s. So it's definitely lower growth, and the world is still a nervous place. Yeah. There's a lot happening in the world. US, trying to increase interest rates. Europe's still got a whole lot of issues. Greece, who knows what's going to happen there, and obviously, terrorism issues that pop up right around the world. So still a lot of issues. I guess what we fundamentally focus on is good companies, and the way we look at it is good companies will perform through good times and bad times. And in fact, when growth is a little bit slower and things are a little bit harder, actually a good quality management team we think is going to deliver better returns in that sort of environment. So we're all about the bottom up. We're all about getting to know the management team, getting to understand the company, focusing on those quality companies, and we think they'll perform in the coming year as well.
If I can put you on the spot, the sectors for next year.
Well, once again, I'm probably less focused on sectors. I'm more focused. Some of our bigger companies, which are very specific, companies like Sydney Airport's a big company for us. Suncorp. Once again, it is a lower growth environment. Typically, what we're looking for, if you can deliver growth in a low growth world, you're a rare asset and you're going to get bid up by the market. If you can deliver sustainable yield in a low growth world, you're a rare asset and you're going to get bid up by the market. So stocks like Sydney Airport, good yield, good growth, steady growth. Suncorp, same, really attractive yield and good growth opportunities. Seek, another example, so something lower growth but still really strong growth outlook. If you look in the property sector, stocks like Goodman we think are really well positioned. Industrial property is really well positioned as well. So they're the sort of things that we're looking for, and I think the growth and the yield continue to be where, that's the rarity. And if you can find companies that can deliver that, you're going to be positioned well.
Congratulations. Look forward to seeing how the fund goes next year too.
Thanks, Effie.